Good evening and welcome to the Australian Stock Market Show. My quote for tonight is from Russian writer Ayn Rand. She said, "Wealth is a product of a man's capacity to think. No one can take away your capacity to do that." And I might add, regardless of gender, and remember to never take this gift for granted, because not all of us will continue life in good health or with all of our faculties. Now, I've got you thinking, haven't I? So on a lighter note, your capacity to think allows you to question what you're told, and hopefully in a constructive way that will help and not hinder you. This is so relevant in the stock market. So tonight, in our no BS approach to all things stock market, we will get you thinking about a rule that you may use for selecting stocks, but should be wary of. We also have for you some interesting stocks below $10 that could be good to buy in 2023. This is all part of our goal to help you take another step towards creating a better financial future for yourselves and your families. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. How are you?
Great.
That's good.
Great. I'm just thinking of all the stuff I've got to do in the next week.
Really?
I know, so much stuff.
You're so busy, aren't you?
I know, I'm dealing with all the experts with Talking Wealth at the moment, and that's going really, really good. So
fantastic.
Yeah, no, we've had a lot of feedback. I think I've got an email later on from somebody from Talking Wealth about
that'd be nice to hear. Who's that from?
There's somebody who's been watching, like we've done, like there's a few 1 hour things that I've done, training things, and you and me have done a few as well on, seven steps to success in trading and the psychology of trading, and there's a few things that we've done, like an hour-long thing, and there's a lot more of that we're going to be doing when we move into our new studios. We're moving into our new offices next week, and new studios.
That's
but if
exciting.
people haven't checked out talkingwealth.com, I think they should, because it's such a great resource for so many good stuff. So many different things on there, from financial planning, retirement, from business to entrepreneurship to mindset to money.
Yeah, any questions that
property.
you have, get answered there.
It's just amazing what we've got on there, and the feedback I'm getting is really, really cool. So check it out, talkingwealth.com. So go to that and subscribe. And one thing we haven't mentioned on this show is next year we won't be doing these shows live on YouTube the way we're doing them right now. Most of it's all going to be on Talking Wealth. We're going to expand the show.
Yep.
We're going to put a lot more into what we're doing, and a lot of more education, a lot more content, so people can get a much, much better.
So what you're telling me, my hands won't be tied anymore?
No, not so much, because obviously YouTube, we've got to be really careful, because you get all these people that are keyboard warriors and all the crap that happens. So I want to get away from all of that sort of stuff and really get in with people that are watching and saying, the serious people will watch, and they really do want to learn, and that's where we can expand and have a lot more flexibility than what we do on YouTube, because YouTube sometimes they ban you and they do all sorts of stuff, so you've got to be careful. But Talking Wealth will absolutely slam dunk it next year, what we're going to do for that.
Oh, I'm looking forward to that as well.
I know, you've done some great interviews, haven't you?
Oh, it's been so interesting. I feel so, I guess really humbled and fortunate to be able to speak to all those people. They're just such amazing
I'm learning so much. I mean,
minds.
people go to me, how do you learn so much from this? And I go, oh, look, these people are just... I'm
you
learning,
can't take
learning,
all the
learning.
credit.
No, I'm not. I'm just asking questions like you are, and it's like I'm learning so much. And, I know a lot about property and stock market, obviously, and investing in all sorts of things, but I am learning so much from Australian experts and the US experts. So, to me, if I'm learning it and you're learning it, and
we can pass that on to other people. It's just a sharing sort of environment.
Correct. And these people are just really genuinely helping, and they're keeping it, I won't say a low level, but they're keeping the information really, really relevant. It's not high marketing and that stuff. Like you see on TV all the time, you get all these shows and all they're doing is pushing the company that's sponsoring the show.
When I was sitting there sometimes, I was thinking, I'd forgot about the camera, and I was sitting there thinking, wow, I'm just having a conversation here. And I got to ask so many questions, and I was so fortunate. That's how I felt anyway.
I was thinking, where's my coffee? Because it's just like we're in a coffee shop having a great chat.
I needed the couch,
Was it one of those psychology people that says put you on the couch?
Put your feet up. That'd be nice, wouldn't it?
I'm trying to analyse you, but Janine. So that's anyway. But tonight, what we got tonight?
We have got so much tonight. This is the 4th Tuesday in the month, and this means that we take a look at the world currencies. So let's get into the charts.
Okay, on your screen right now is the world currencies. So you've got all that, and that is, I can't see it, I haven't got my glasses. Is that Yili?
Here, let me magnify it for you. I put it on one of the largest settings I could.
Well, thank you. Thank you for looking at me. Well, I was just about to say we're not doing any live callers tonight because our power went out and it's upset our caller system at the moment. So we won't be doing live callers. I won't be giving away a book, but we will be spending some bit more time on the charts.
Does that mean that you have to talk more?
Probably.
Or I have to talk more?
I know that's a sad state of affairs, isn't it? Can we get into the world currencies?
Australian dollar, Japanese yen, look at that, up 12%, 12.16% to be precise.
That is doing so well.
The Aussie dollar versus the Chinese renminbi yuan. We actually know some people that are going to Asia, so that'll be helpful to see those currencies up for them. The Australian dollar versus the New Zealand dollar up 1.9%.
That's enough.
And Australian dollar versus the euro up 0.89%. Now, something interesting that I read today was on the IMF's website, which is a really good place to go.
Yep.
And they talk about how if there's a 10% increase in the US dollar, that translates to a 1% increase in the inflation rate. So I just thought, wow, look, you just want to keep an eye on that currency.
So what's a 10% increase in the US dollar compared to what?
A 10% increase in the US dollar.
Compared to what?
Say even to our currency, if it went up 10%.
So then our CPI goes up 1%.
Then our inflation rate could go up by 1%.
Gotcha. Well, I don't know. But it might be different. I don't think you can blanket do that because our major trading partner is not the US, it's China and Asia.
I know, but there's still a significant percentage. I think they said it was 40% of transactions are in US dollar or US dollar based still.
Well, that's slowly changing now, isn't it?
Well, is it though?
Yeah, it is. I've been saying for years the US dollar will lose its dominance. And I still think that. I think there's no way known in probably 20 or 30 years the US dollar will be anywhere near as strong as it is today.
Well, look, I mean, I think, if you look back at what's happened in the past, there are spikes in the US dollar, and when the US dollar's rising, inflation's going up with it, that peaks out and then we see it turn the other way. So it doesn't stay up high for a long time.
Are you going to show us any charts?
Why not? Before we do, though, let's just look at the red side of the board.
You've got the mouse, you're in control.
The Aussie dollar versus the Canadian dollar, we're actually down 3.33%. So if you were thinking about that trip to Canada, maybe wait and see. Aussie dollar versus the Swiss franc, down 4.4%. Now we jump down to Aussie dollar versus the Hong Kong dollar, down 9.07%. And the one we were talking about before, the important one, Aussie dollar versus the US dollar, down 9%. Okay. So a big difference there. So we know that's having an impact. And the Aussie dollar versus the Russian ruble, we should mention, still down significantly, down 26%.
Well, that's coming back though, isn't it, really?
It has come back, but it's changing. It's changed quite a bit, hasn't it, over the last year?
So what else are we going to look at?
All right, so now to the charts. Let's just have a look at what's happening with the Aussie dollar versus the euro. So we've seen that the euro tends to want to, Aussie dollar versus euro tends to want to hang around in this sort of a zone here.
65 cents, yeah.
And that's really an important level for it. So any significant fall below that, I think that it's a real warning sign of what could be to come. But I don't see any huge sell-off happening at the moment. It just looks like if we take that crosshair off, it just wants to hang around. We can see there's sort of almost a bit of an angle of those lows there happening, and it's more or less just coming down to the same sort of angle.
Okay, so it's all looking good.
It's looking like it's quite steady. Have we got time for one more?
Probably.
All right, so we did talk on a previous show about the relationship or what's happening here with the Aussie dollar versus the US dollar, and how our currency, when it has these significant falls, tends to fall anywhere between around 20 and 40%.
Yep.
We can see it that so far we're down around 23%, so it's in that zone for a potential turnaround. So it's too early at this stage. I'll just change it to the weekly chart so we can get a better idea. But we're starting to see some higher lows come in on the Aussie versus US dollar. So, the US dollar could be peaking out, flattening off, and then the Aussie dollar starts to move up. So we could see another higher trough form at some stage. But this level is a bit of a stumbling block up here around that 68.70 cents for the Aussie dollar.
Cool, fantastic. Is that it for the currencies? Or?
That is it for our thoughts on the world currencies. And now it's time to get into our first email for the night.
Alrighty, our first email question is from Anton. He says, "Hi Dale and Janine, thanks for another great and informative show. I'm interested in APA Group and would love to hear your thoughts about this stock for the medium term. Thanks. All the best, Anton." P.S. He says, "I was desperately waiting for another Janine joke all show long. Go for it. Go for it, Janine." Yay.
See, there's another one.
Yay, Janine.
Yay.
Go for it.
All right then, shall we have a look at the stock?
If we must.
So APA Group, I've got the monthly on the left, the weekly on the right. Now, what's interesting to me is that the big sell-off we've just seen is just so out of character with the rise that was occurring just prior to that.
It is. It's huge.
I mean, it was looking lovely, wasn't it? It was trending up beautifully, and then we see this happen. Now, you know, there are some stocks on the market that you can, you know, when you look at the trends, that it's going to be volatile from time to time, and you're going to see it. But I just thought that although during COVID it had that big dip, historically it hasn't done this sort of thing.
No, it doesn't. It really hasn't done that. I mean, it's 6 weeks up, well, 5 and a bit weeks up at the moment. Very, very, very strong move. And you would expect it to come back. So is this an overheated move? Because
is it an overreaction, you mean?
Yeah.
Well, it could be. I'm just a little bit concerned about it at the moment, but it's just come back to that long-term support there.
Yep.
So it's a real test time for this stock right now, given what it's done. You would have been, it was in blue sky. Now, a lot of people think that once a stock's in blue sky, it'll just keep going, and they often do. But we know after having done so much research that sometimes when a stock makes the next move up, it's going to pull back. And I wouldn't have expected it to pull back by that much, would you?
Oh, look, that's 30% fall. So why would you think it was going to fall that much after breaking through all those highs there at around just under $12? So you'd think it would have kept going and not pulled back that far. But look, right now, I think he doesn't say whether he's in it or he's not, and he's just asked our thoughts on it. And
well, it's got to get back through all that, you know, and the concern is what it does when it gets to that level. So I just watch it with a bit of patience right now.
I think short term, it's going to come down for a couple of weeks. And then after that, we'll know that then if this comes down for a couple of weeks and starts to find some support sort of somewhere around, you know, sort of in a $10 mark or between $10 and $11, let's just drop that up a bit. Let me turn that off. If it just comes back for 1 or 2 weeks and finds some support in and around that sort of area and starts to take off, would you think it's going to go through those levels?
Yeah. I mean, right now, the volume's showing that it's slowing down a little bit.
Yeah.
So I think you're right. It is getting to that sort of extended point in the current run-up.
Yeah, I just think it's a bit, I'm thinking, or what I'm seeing is I think it's a little bit overheated. It's got to come back a little bit just to take some of that heat out of it. But I do like it. I do think I'd need to do a bit more research to see what's more medium to longer term, but I do like it.
Okay.
Anything else you want to say for it?
No, not at this point.
That's it.
Shall we go into the next email?
Like.
Before we get into our next email, if you enjoy watching our show, then hit that like button now. Our next email is from Jack. Hi, I'd first like to say I find the show very entertaining watching you both banter back and forth. On a Tuesday, even my wife smiles and she's got no interest in the stock market. I'm really enjoying doing the diploma and I'm in module 3 at the moment. Oh, fantastic. Congratulations. That's one of the ones that I call the speed hump. Because you get so much in that module. It's amazing.
Oh, that's the gold, isn't it? Really?
Yeah, and it's like when you get to module 4, it's like skiing, you know, when you're first able to ski down a slope for the first time.
Yeah.
As long as you don't crash. But
so module 3
really
is like
fun.
the snow plough where you're working hard.
Yeah.
And module 4 is where you're shushing down.
Yep. Well, module 3 is all about discovering something that only 2% of the population know.
Oh, shit,
so,
very important.
And I'm really enjoying it and would recommend it to anyone, and I haven't finished yet, so that's saying something. You mentioned Telstra on your show as a stock to watch. I've done some quick analysis on the stock and I would look to enter for the medium term. Regards, Jack. Thank you very much for that email. Let's get in and have a look at Telstra.
People contacting me about Telstra. I did talk about it yesterday because somebody said, well, you said it was going to go above $4 and up to around $6, and because last week it dropped away a little bit after that news with that crypto exchange going belly up, and the reason why is because Telstra Ventures had invested into that, so people thought Telstra was going to crash and fall out of bed. And I actually had somebody said to me, "Oh, you've got to get out of Telstra; it's going to crash." And I just started laughing. Yeah, it's like, seriously? No, that's sort of play money for Telstra.
That's right.
It's in their belt.
So
anyway,
look, it's held up really well,
it
as
has.
you probably thought it would. So we can see there that Telstra's holding nicely above 390 at the moment. Obviously, we'd like to see it get back above 410 and start pushing higher. This consolidation on the monthly, you don't often see these beautiful little consolidations in the share price on the monthly. They can be quite jagged, but it's actually quite gentle by all regards. So look, I think Telstra is still a really important stock for 2023.
Look, I do too. I think it's long. I've been saying for ages, this stock is long-term bullish, and there's zero doubt in my mind that it's long-term bullish. Is it stumbling to get a move on? Yeah, it is, but that's Telstra.
Yeah.
Telstra will make a move for a bit, and then it'll just do nothing too much for a little while. Then it'll make another move.
So we'd change our mind, wouldn't we? If it started to take off and fell away, so it went through the September low, we'd be changing our perspective on what
I don't think it'll do that though. I think you know what we're seeing a lot of challenges all the way through here. You know, I'm talking about those highs there. We're talking about that's December 2021, and we've had a bearish market here in Australia. That's a big enough move down. If you look at that size of that move, it's the same size as the whole market moving. You know, around 16%. Our market fell 17% into that sort of area in June. And it's just waiting for the market to start moving up, which it's already done. Our market's moved up for 6 weeks. I think we're going to have 1 or 2 weeks down now. I think it's the start of those couple of weeks down. But I think once our market starts to gather some momentum, I think Telstra's going to go.
Okay.
You know, maybe I'm wrong. I don't know. But
no, look, I like Telstra as well.
This time next year, we'll be able to figure it out, won't we?
Won't we?
We'll be able to tell everybody what happened with 100% accuracy.
Cool.
Anything else you want to say on Telstra?
No,
Okay.
I'll leave it to you.
All right, Janine, well, I think it's time we get into our topic for tonight. This one's about selecting stocks. And as you would know, you love talking about finding great opportunities opportunities in stocks. Now tonight we have 10 to share with you, and they're all priced below $10. Before we get into the stocks though, Janine, I think it's time for everyone to give the show a really big thumbs up to show the team that they like and they appreciate what goes on into producing this show each and every week. So remember, grab your little mouse and move down to the bottom. So click that like button now. Now, the more clicks we receive right now, the more stocks Janine's going to share.
Oh.
Also, part of the deal tonight is that you hit the subscribe button while you've got your mouse down in that area. So you need to do that now. So hit the like button, hit the subscribe button. Our guys are going to be watching it, and the more you do, the more Janine's going to do.
Come on, we want more stocks, more clicks. Thanks, Dale. What a great intro. I've never heard you do such a good intro to the topic before.
Oh, my pleasure.
Our viewers know as they watch the show, we do our best every week to share what's important. And if you are new to the show, you might be super excited about what we're going to share. So I'd like to give you a warm welcome. We are here to help you on your journey to get educated and stay informed.
Well, you really do aim to include everyone, don't you, Janine?
Well, I try. I try to make it inclusive. I can still remember what it was like being new to the stock market myself. Now, Dale, even though I'm not allowed to laugh tonight because I haven't had my stitches removed from my face yet, and I just couldn't help myself. So I hope my doctor isn't watching. Here's my joke for the night.
I'm waiting. Hang on, wait a minute. Are you sure you really do want to embarrass yourself with one of those jokes again? I mean, you had a break for a couple of weeks and you could have had some, you could have ridden into the sunset like the Lone Ranger and the White Hat without mentioning the word joke again, and everyone would have been perfectly fine and they would have forgotten about your jokes. So you sure you want to do this?
Well, you see, Dale, there are some lovely people who are loyal viewers and they've encouraged me to give it another go. And I didn't want to let them down. And Jack, one of our viewers, emailed us, so I can't hold out any longer. And besides, I have been working on my delivery, and so I think that you will have a chuckle at this one.
I doubt it, but you must go on. But remember, your stitches are not supposed to come out till Friday, so we don't want to mess that up. We don't want to mess up the set or your face.
Yeah.
So, gee, I hope I don't regret saying this, but knock 'em dead, or perhaps I should say knock yourself out with this one, hey?
Okay, Dale. This is fitting with the theme tonight about thinking, or more specifically, thought. On the weekend, I was at the local garden shop and I thought I saw Michael J. Fox.
That'll be interesting. Really? Did you approach him?
Well, no, I wasn't sure it was him as he had his back to the fuchsia. Come on, you've got to give me that.
Back to the Future.
I thought that was really good. I know there'll be people out there
I'm
laughing.
glad you said he didn't have his flux capacitor because that smells. Whoosh. Seriously,
Stop it.
I actually waited weeks for that one.
You did.
I'm glad I didn't hold my breath. I'd be dead by now, I tell you.
Now, I heard you chuckle on the side of your face anyway, and I'm getting warmed up. I intend to take it up a notch on the show next week.
Okay. If you're happy now, you don't have to... You're happy now you've got that out. Can we actually get into what you do best? And we all know that's not about telling jokes, so let's just get into tonight's topic, will we? Which is all about the opportunities in our stock market to buy stocks below $10 in 2023. So you stop laughing?
Oh, my face is sore. Okay, back to the drawing board. Now we know that many investors will choose to do what's easy rather than what is best. And there's safety in numbers, but stop and think, as this is how the stock market herd works. So we want to share something really important with everybody. We're seeing a lull in our market right now, and our current analysis indicates another bull run is ahead. But when this next bull cycle concludes, there will be a significant correction. Let me ask you this. How prepared are you for that?
I mean, that's such an important point, or really important question, Janine, and I really do want to make everybody think about it simply because, as we know, if you fail to plan, you plan to fail. Now, this is not a situation where you can say, okay, yeah, when it happens, then I'll make a decision on what I'm going to do, as you will lose a lot if you're not prepared when the next crash happens. Now, think what happened back to the correction in the GFC, or what you did in the GFC. You're going to repeat that.
That's interesting, isn't it? And very true. But Dale, I think we need to let everyone know that they can relax right now, as this correction is not for a few years. However, the point of this, as Ayn Rand said, is to get you to think now as to how you'll handle it. Because if you don't, you may end up following the herd over the cliff.
That's really good advice, Janine. I mean, a lot of people do that now, which is why we want you to share with, or we want to share with you, how following what the herd does really is unwise. And one of the things we constantly observe is investors using an old rule that was tossed around from when I first started in the market in the 1700s, which is to buy stocks that are trading below a particular price point, or to buy when a stock is trading near its 52-week low, which is really like buying a stock with a blindfold on. In all seriousness, you may as well play pin the tail on the donkey, as using this sort of approach is highly unlikely to leave you feeling, or highly likely to have you feeling like a donkey.
Damn, that was an opportunity missed. I should have bought the tail. You ready?
You could have. You want to pin a tail on my backside?
I do remember this so-called rule. I even recall looking for stocks myself this way in the very beginning, but as soon as I understood how to read a price chart, I realised how very risky that idea actually is. Now I know a lot more. Just the thought of this rule makes me feel that it's even crazier for beginners to use this as a way to select stocks. It's just nuts.
Okay, so we've gone from donkeys to nuts. That's really good. Okay, I agree, but the masses follow the masses, actually what they do, and many investors are still led by the masses to believe that this is the right way to invest. But no matter how many times we say to people you should not invest this way, they still continue to do it. Now, this is really similar to another rule, and that is to look for cheap stocks below a particular price level, as if you'll have more chance of making a profit on a lower price stock than you will on a stock that's priced at, say, above $100, which is simply and categorically not true. You don't have to take my word for it, you just need to look at a price chart to see the truth.
The truth is you can find good opportunities at any price. However, we encourage you all to make sure the stocks you choose are aligned with your tolerance to risk and level of knowledge.
Okay, so the higher the risk, the higher the risk, the more knowledge you actually need. That's what I was trying to say. I was just trying to think of what I was going to say. The higher the risk, the more knowledge you need to trade them.
Exactly.
And actually manage the risk that you have. Now, investors ideally should stick to the top 200 stocks by market capitalisation. And the lower the level of knowledge and experience that you have, it means you ought to focus on the biggest, most liquid stocks, say the top 20 or the top 50. Remember, by doing this, you significantly reduce your risk and increase your chances of success. And the next piece of advice is to never buy a stock that has not confirmed it's more likely to rise than fall. And that one, so many people break.
Yeah, I know. And we want to emphasise again, never buy just because a stock is trading near its 52-week lows. And I'm going to show you some examples of why not to do this.
Okay, so as you can see on the screen, the price initially rose before continuing to fall away from the buy near the 52-week low. And as I move from one stock chart to the next, the same thing occurs. Now, for one reason, the stocks were in a decline and the investor did not have proper rules to buy, nor did they have the knowledge to minimise their risk in case the stock fell further. And this resulted in some big losses. So I think everyone should be getting the picture by now. That's it for the 52-week low or the 12-month rule.
Right. The reality really hits home, Dale, when we share these sort of things, doesn't
Well,
it?
I hope it does because, as I said, most people tend to ignore what we're talking to them. But I couldn't agree more, Janine. But as history shows, many of those watching will ignore what we've just shared. Now, we know that you've been waiting to see some stock opportunities below $10 that Janine keeps promising you, and we hope to have impressed upon you that it's not the price of the stock that's important. So you'll put much greater thought into the decision to invest your hard-earned money in any stock. Now, a promise is a promise, and so we'll run through 10 interesting stocks below $10 for 2023. Now, Janine, how about we get into the charts?
At last.
At last.
All right. Let's
Isn't that
get
a
into...
song?
No, not from my era.
I hope you don't want to sing it. After last week, I'm still scarred from that singing last week. Woo woo or something, wasn't it?
Yeah, it's funny. I'd forgotten all about it until you mentioned it. Did you have to?
No.
All right. A2 Milk is one of the stocks on my list, believe it or not. Now,
This is
not
good.
Yep, it's not for every portfolio though,
No.
because of the class action still hanging over the head of A2 Milk. The issue is that it presents a risk.
Yep.
Regardless of what anybody thinks about the outcome, that's the situation. Regardless of what you think the upside potential is, there's still potential for the risk to the downside. So you really have to look at this and say, well, does that fit the portfolio criteria that I've got? And it doesn't mean that it won't change later because, okay, while we like to get in towards the start of a trend, sometimes stocks can trend beautifully over time and you can get loads of opportunities to get in along the trend and potentially get in
But
towards...
it is a good one. And I think people shouldn't expect it's going to do what it did out of that 2015 to 2020.
Oh, that initial ramp up.
That huge ramp up. But I like it. I've talked about it on the market report on Mondays for the last couple of weeks. People have asking about it, so I do like it at the moment.
Okay.
I think it's an awesome
So
pick.
that's one on the list, and it's quite a large one. It's still 4.57 billion in terms of market cap, if that's
Gee,
part
we're
of your
milking it
criteria.
now, aren't we?
Aren't we? All right, so the next one is AGL Energy. Now, we like AGL. We've talked about it on the show. We said it wasn't the right time to buy, and the stock fell away quite significantly. You'll see there. I'm just going to... Oh, actually, I'll show the monthly chart first. So here's the history of AGL. So you can see it's trading at a long-term low there.
So good.
It's coming off that bottom now. It's still in the early stages of doing that right now. And we could get a trend line soon down here. It's possible. So you just be looking at that and just deciding when that's coming in. But it's been up for 1, 2, 3, 4, 5 weeks now already. So it may go up for another week, but it might come down from here as well. It'd be ideal if it actually did. But the interesting thing about it is liquidity. The volume's dropped right off.
It has dropped off, hasn't
which is strange, isn't it?
It is quite strange. You'd think I'd be wanting to see volume increasing right now, which basically says to me at the moment, I'm not sure whether this rise is sustainable.
Yep.
You know, it might come back for a few weeks and then we might see, find some support and then volume might increase. But
yeah, I was also thinking that because of the takeover talk around Origin, I was wondering if a lot of the trading volume that was going into this has actually gone the other way.
Possibly.
To Origin.
Possibly.
So that was another thing, because it's quite strange, isn't it, how it's just so light on.
But I do like it. I think it's an awesome pick, Janine.
All right, so that's AGL. Okay, I forgot to mention the market cap of AGL was 5.27. Bendigo, up there around 5 billion as well. Now, we've talked about Bank of Queensland previously. Second-tier banks we do like at the right time. Now, my only concern right now, based on historical patterns on this chart, is I'm not 100% certain that the low, this low here is actually in.
Is actually in, yeah.
And that's a challenge with both Bank of Queensland and Bendigo. I mean, if you're trying to short-term trade it, that's one thing. But if you're trying to wait for medium to long term, there's a lot more signals that need to be ticked off before it's a good opportunity. Otherwise, like you say, instead of it being a good buy, it could be a good buy.
It could be the opposite, yeah, good buy with your
And so
money.
that's the challenge at the moment. I'm not going to share on the show exactly what the technical reason is with it, but people who have done some of our courses would be able to see it on the chart.
I know, this stock has, I think it's underrated, but it just doesn't really have big, long, sustained runs.
No, well, I
really
think we're in the washout, right, from the Royal Commission and COVID. And, I mean, these banks would often be the ones to sort of offset some of your investment. If you had a couple of investments in big banks, you might put a second-tier bank in there just to give you that bit more growth and some dividends on top of that. Short to medium-term play, generally.
Yeah, absolutely.
So that's Bendigo.
Yeah, so that's Bendigo.
5 billion there. And then this is Data 3, which is one of the smaller ones of the stocks that we've got on the list for tonight. Now, it's gone through this massive consolidation. It's broken out of it. It's testing that high. I'm just waiting to see how this looks, but I mean, cheapers.
This looks great.
If it keeps going up. Now, if it takes out these lows here, then forget it. It'd be a lot riskier to try and pick it up. It could be topping out, but I would just be watching this now to see an opportunity.
And there's a lot of adjectives I could say about this stock, but it looks really, really good. And 1.03 billion, it's not too bad,
It's all right for an individual
it's all right for an individual,
Yeah, definitely. All right,
Dexus?
So Dexus market cap. Now, the criteria I should have said from the outset when I selected these was between $5 and $10 because we'd already had a show less than $5 where we looked at stocks under $5.
So $5 to $10 in that bracket.
Yeah, that was a while ago. So I just thought we'll try a different search and see what comes up. 111 stocks came up.
Yep.
But what surprised me again, like I said when I did the last search, is that there were so many ETFs in there.
Yeah.
And I've never seen this, because it's all culminated from the GFC.
Yep.
Because the ETFs are the best thing since sliced bread, supposedly.
Well, according to the big end of town who sell them.
Yeah.
That's what the thing is. It's like I was watching a video today from one of our experts. It's basically saying why you shouldn't listen to the big end of town. So who's giving you the advice on your money and how are they interested in that? So you're looking at advisors, and this is from a financial planner too.
Yep.
And he's saying, often he said, I'm an independent. I don't care where I put your money in terms of from me getting remunerated, but he said you really need to be understanding where the people advising you are getting remunerated from.
Yep.
And he was putting some warnings out there because you're seeing advisors pushing people into ETFs and pushing people into other products that may not necessarily be in the person's best interest, but it's on the surface it seems to be. But I'm with you. ETFs have taken over too much. And I know people disagree with me, but I think the ETFs will be part of the next crash and we will have another GFC with the ETFs in it. And I think
everybody thinks it's the cryptos, but they've already crashed.
The cryptos are down nearly 80%.
Yeah.
And I think Bitcoin's even got further to go. I think it's got a lot more. I might bounce for a little bit, but I think it's got further to go. It's not, and this could be the end, if I'm allowed to say that, or the beginning of the end of the decline for a bit of a time. But it's also, I think, crypto is really changing now, and I think it's no longer that I can buy crypto and forget about it, make a lot of money. That's gone. You've missed the boat, and I think what we're seeing here is, the market is a bit different. It's really, really different at the moment, and I think people do need to get some good stocks and understand what they're actually doing.
I agree. All right, so look, this is Dexus. Now, I mean, as you can see with Dexus, it had trended absolutely beautifully up this rise. So it was actually quite similar to GMG. GMG is probably our preferred pick out of the property ones.
Yeah.
But this one came up, so I thought I can't, pass this up, especially the pattern that's unfolded on the monthly chart that we like that's occurred. It's just sort of trying to find support at the moment, but it's not clear whether the low's in yet. It still could have further to fall, and that's the risk with it right now. So, but it's definitely one to watch for next year, I think. And 8 billion at the moment, if it starts to rise, obviously that number's going to clock up.
Yeah, this is what a lot of people don't pick up, and that's what we were saying at the start. It's like, if you fail to plan, you plan to fail. And this is one of those stocks you should stick on your watch list and wait for it, because all too often investors are finding, well, what can I buy today? And then they're
using yesterday's news to make that call about what's going to happen in the future.
And they're using older information to look at that, but then they keep searching for more opportunities, but they miss out on the good ones because they're always looking elsewhere. And it's like that. You ever read that book, Acres of Diamonds?
Yeah, years ago you actually raved about it.
It's actually a speech, but they've made a little book on it. Just type in Acres of Diamonds and you can download it for free and read it, and it's just such an apt story about what people do when they're searching for gold, if that makes sense, or the gold or the diamonds in this case. And people are searching all the time for stocks to buy the next big winner, and then they miss something like this when it takes off because they're looking somewhere else.
Yeah, exactly.
And this is the time where we're saying you really do got to plan for that next crash. You got to plan for what next year is.
Well,
the next 5
nobody
years
wants
are.
these types of investments right now. What are they? You know, and start looking at those for the future. Not to invest today, but to look at them for when they are good.
Yep.
Yeah.
And everybody wants the hot tip for today. That's crap.
Yeah, I know.
Okay, so
All right.
I've made you go down another track.
Okay, that's fine.
I'll shut up.
That was really good information. Home Consortium, HMC, down at that lower end, but still a big stock, 1.52 billion market cap.
Wow.
This is sort of a newer release in the market. I don't usually pick something that doesn't have a lot of history, but I just like the orderly way that it's unfolded on that chart. And I'm just watching to see what's going on. And, this could be...
I don't know this stock at all.
Well, I've never looked at it before, so it could be a really good one. But obviously, if it fell below this low here, then I'd say just let it go.
It looks
it's
like
not
it's
ready
setting
yet.
itself up, doesn't it?
Exactly.
I do like it very, very
So that's
nicely.
another nice little one. And we're up to Linus. Now, this is a really popular stock. It was talked about when mining boom was, going.
Yep.
It was always talked about, Linus. But, of course, it had this massive correction here. And what was funny about that was that we had the correction into the GFC. Look what it did.
It just went stellar.
Oh, my goodness. It just went from $1 right up to $26. Can you imagine the people that have hung on to that all the way into the decline?
Well, they would have done all those old adage, look, it's come down, but, when it goes back up to that point, I'll sell it. And then it goes a bit further and they go, so when it gets back up to that, I'll sell it. Because they're in profit, because if they got in early enough, they're still in profit. So the hurt's not there.
Yep.
And then it keeps coming down and then it keeps coming down. And then they get to the point where they go, I can't sell it now because I'm losing money. And then it goes even further and they go, I definitely can't sell it now because I'm losing way too much.
You're emotionally and financially invested at that point.
Correct. And I don't know, pretty much every month I have people saying that to me. I go, why have you still got that stock? Oh, I've fallen too much. I can't sell it now. Or I can't sell it because I'm going to be paying tax on it. I was like, what?
Or what's the point in selling it because you've only got $200 left out of $10,000?
It's gone from this down to this and there's only a couple of $100 left in it. What do I do? And
That's right.
It's so common for us to hear those sorts of stories.
Well, look,
but I do like this stock.
I like the way that it's actually set up at the moment. Like, we just need to see it start heading back up to know what the direction is at the moment. Volume looks okay. It has dropped off from this rise here. So it'll be interesting to see what happens if it starts taking off again. But
so
I
in
think
rare earths, you'd think right now it should be doing much better, wouldn't you, in rare earths?
Well, look, I mean, they're a bit sort of off at the moment. So they've actually, there's a lot of them that have actually rolled over. So
lithium stocks, there's a whole lot of other types of, in that sort of space, in that EV space, providing all the minerals and everything from it. And not doing as well, but this is setting itself up. I do like the look of it, and it's a good stock.
Yep, so keep an eye on that one. And then we've got Northern Star, which is 11.7 billion at the moment, even though it's way down from its high. Now, this has taken off, and we said, I think in last week or the week before show, that given it's taken off like it has, there's a little gap there on the weekly chart.
Yep.
We were thinking we wouldn't be surprised if it comes back. So, it might go up for another week, but overall it may come back, so we just got to wait now and see what it does.
Well, you'd expect it to come back a little bit, wouldn't you?
Yeah,
really?
But just like we've had rises before on stocks, it doesn't mean just because a stock rises for a few months that it's going to keep going up.
Well, no, these could be suckers rally, and we saw how many of those we've seen this year that people have jumped in on a suckers rally only to, email us a few weeks later going, I bought this at this and now it's this, what should I do?
Look, some of our viewers have made money on this one.
Yeah, they have.
So it's good if you've made money. Congratulations on it.
Yeah.
And look, there'll be other opportunities if you haven't got into it yet to pick it when it's, on in a better trend. So there's Northern Star. That's one definitely for the list. Gold stocks.
Have we done
definitely
47 stocks yet?
I'm not finished yet.
Oh, okay.
You can't cut me off at the knees, you know.
The guys are checking how many likes and how many subscribers we got, because remember, you're not showing more stocks.
Well, what
if
are
we
they
don't
saying at the moment? I'm listening.
Well, there's not enough. Everybody has to hit the like button and the subscribe button.
Hit the like button so I can continue, please. I've got 2 more really interesting ones that I'd like to talk about.
Otherwise, they're going to tell us to move on.
Really?
They're tough.
Oh, geez, I've never had this before on the show. What's going on? I just want to talk about the stocks.
Well,
keep it simple, can we?
We have to listen to the powers above us.
Right. All right. So
for me, that's my wife.
Look, I'm just getting really uncomfortable sitting here. Can I speak now?
You can speak now.
Okay, thanks. New Farm, market cap 2.26 billion. Had a massive correction into the low here, which was in the time of the GFC, but interestingly, it kept falling into July 2010 while everything else was going up.
Yeah.
Right, and then it struggled for ages. It just took forever to get going, and there was a takeover at one stage offer, and that fell over, and the stock just plummeted. And I think, is it more than one takeover that's tried to happen?
I'm trying to remember because as I get older, my memory gets a bit fuzzier.
But it's actually started looking a bit interesting to me right now, and to me it looks more like a mining stock, which is really weird to see a stock like this doing this sort of pattern that we're seeing.
Yeah.
You've got to have some really good rules. This is only for the experienced, and you need to have tested the history of it to know what you've got to use here. So really be mindful of that.
Okay. So it is looking quite nice. It's up for the last sort of 6 or 7 weeks. It's looking steady. It's looking steady, but the challenge with it at the moment is what rules to use. Now, I haven't actually looked at this one for a while, so I haven't looked at what the rules are to use, but there's a fair bit of resistance around that $7 and then $10. But I think once it gets through some of that, it could take off. Okay. So the guys are telling me that we can do another stock as long as people keep smashing the like button and the subscribe button.
All right, then. We've got Santos is my last one on the list. Now, this is actually can be quite an ugly stock at times looking at it. But if it takes off on the downside, I don't really care. I'd just be saying sit there and wait and be patient for when the next opportunity occurs. But if it starts moving up again, this could be a really nice one moving forward. So we've had this long-term support down here. It's taken off from that. It hasn't done as well as some of the other stocks in the space, like Woodside's done a lot better. It
has done a lot better.
Yep, but we may end up, because it took over Oil Search, there was that slowdown in the share price, and there's always time after a stock takes over another one to sort of work out where everything is at. So, I'll just say watch this one.
I'm going to say watch this space. Okay. No, I think that's you've done.
It's a really good mix of different stocks, isn't it?
It is. I think if somebody put $1,000 in every one of them, they'd probably be pretty happy by the end of the year.
Well, look, I wouldn't necessarily go into. I wouldn't do that. You've obviously got to choose.
That's how much conviction you've got on that. I thought you said these are the 10 best ones for people.
It was the 10 best between $5 and $10 that I thought had an opportunity. But it may be that there are 5 that trigger at one time, and then the rest don't trigger.
Okay.
So like we said in the script, wait for that confirmation.
Okay, so this time next year we're going to show you what you did this year and see what happened.
We can. Have a look at it.
All right, well, that is it for our topic for tonight. Now, before we get into our next email, given you're at this point in the show and still watching these 2 crazy people on the screen, it really does mean that you like what we're doing, so make sure you hit the like button right now.
While you hit that like button, we'll get into answering the next question. Our next question is from Anne. Oh, congratulations, Anne. Good on you for writing in. Hi, Dale and Janine. I watch your show every week and have both your books, Dale. Could you have a look at Leo Lithium, please? I bought it in early October at 57.5 cents. It seems to be headed down at the moment. I was hoping to hold medium term until their production is in phase 2. Is this stock worth holding? Thanks, Anne. Let's take a look, Anne. All right.
Holy moly.
So we don't have a lot of history on this one by the look of that.
Pretty much not a lot. So she bought it at what, 57 cents?
57.5 cents, which, jeepers, you're buying on the fundamentals there, really.
Well, yeah, correct.
So a very game to do that. I would just be a little bit concerned. If it takes out that low, it could still find support and go back up, but it's just a question of where to set the stop loss. Obviously, we set percentage stop losses. What would you do in this case, Dale?
I wouldn't have bought it in the first place, but right now I'd be really worried about my money because I just think it looks like it's going to go south. I mean, from where she is right at the moment.
How much did it rise in percentage terms to that
I don't know, the
peak?
thing's not working on me. Let me go. Here we go.
It's trained to obey me.
So that makes sense. So it's risen up 43%. Now, she bought it in October, so she would have bought it somewhere around here.
Yeah.
In one of these weeks. She had a bit of a rise out of it, which is nice. From, obviously, let me turn the lock off.
Actually, this is an example of when stocks float on the market. You know how we say when stock floats on the market, in the first 12 months, there's a high probability it'll be trading below its initial float price, which it's doing that or really close to it at the moment. But sometimes with these stocks, you can get an opportunity for a nice stag profit in the short term.
You can.
And you've got to be thinking of trading it with short-term strategy, at least half your money or part of your money, so you can take some of that, at least your capital, so you can take that off the table and just be trading with the market's money.
Well, she's saying she's hoping to hold for the medium term when they're into their production is in phase 2. So, yeah, I don't know. If you understand the fundamentals and they're really, really good, then I don't have an issue with it. But right now, I just think it looks like it's going to go south. So,
yeah,
which is,
I'd like
if you're
to see
okay
it,
with that, that's fine.
I'd like to see it get above this high here of 71 cents in November before we know which way it's going.
Well, that's the thing. I think it's, I agree with you. Cool. All right, our next email is from Yan Lee. And Yan Lee says, "Hi, Dale and Janine. Can you please talk about SIP?" She goes on to say, "I have a small position, bought almost at the bottom at the end of September and have been watching it quite steadily climbing up. Now, you probably will say it was a risky buy. I do have a rule to buy. It's near the 52-week low and a good company. Looking to buy more. Thanks. Regards, Yan Lee." So she's one of those people that did what you said in the thing.
Yeah, and look, I get it because that was so talked about when I first came into the stock market. It was a thing. So, and they even had it in the paper. You would actually see
the 52-week low,
So they're
52-week
basically
high.
The industry's putting that in there to tell people that's what they've got to look for.
Well, what do the industry want from you?
Well, they want you to buy it at that low to help prop it up.
Yeah.
Yeah.
So you're buying a falling knife a lot of the time.
A lot of the time.
Well, so that's not a buy. To me, it's not a buy rule.
It's not a buy rule, no.
Definitely not a buy rule.
And look, I mean, just so it happens that you've actually bought while the stock's rising by the look of it, which is great because it's actually starting to show some sort of promise in the short term. But I see this as maybe short term or short to medium term, but I'd question where the upside is on it. I mean, let's just have a look on that monthly chart. It's possible it could go up 17%, it could go up 7 or 10%. It's really, at the moment, not clear as to how high that's going to rise before it stops.
But it's an interesting thing. She said she had a rule to buy, and I think that's fantastic. You have a rule to buy, but there's a difference between having a rule and having the right rules.
Yep.
And so many people might have a rule or what they call a rule, but it's more like
when you get to know rules, you start to, and that's what I was saying before about what 2% of the population knows in that module 3.
Oh, yeah.
Because people, when I first entered the stock market, some guy said to me, "Oh, here's a rule that you can use to trade." And I sort of thought about it at the time because, having a scientist sort of background, I thought, well, how can one rule work on every single stock? And down the track, I realised that it doesn't. And even if you had a 50, like we've shown in those examples, just having something simple like that, it doesn't work all the time. Even our rules at times won't work all the time because it's about probability, but it's about understanding what works. And this stock obviously has a certain personality. The fact that it's in the property sort of space, the REIT space, it'll have a personality based on that because there's a certain type of people that will trade it. But look, one of the most important things that you can do if you've got the stock is to have a stop loss on your position at this point.
It's such an important thing. I know numerous times when I'm working with students, and this is like every week, those new students that are just getting into writing rules. We spend a lot of time helping them put their rules together and formulating their rules and making sure they're articulated correctly, that they're unambiguous, but they're also using the right rules for the right situation. Because all too often I see people write rules. They're not really rules.
Yep.
They're just sort of wishy-washy things, and they're ambiguous. It's like, you know, if the sun comes up, tomorrow and it's not cloudy, then I might do it. But if it is cloudy, then I'm only going to do it if it rains more than 3 mils, and it just gets really confusing, and people write these strange rules that don't work. But I think it's lovely she's got rules. I just think she needs better rules.
Yeah, I think so.
But I do like it.
It's going up at the moment, which is great.
So stay with it. We do now have a question from Sebastian, who says, "Hey guys, I have a question about Silk Logistics Holdings. It seems to be undervalued, has recently started paying a dividend and has been expanding considerably. But despite it, this maintains an increasingly good debt to equity ratio. Am I wrong in my conclusion about this company? Cheers, Sebastian." Well, we're not going to get into the fundamentals because that's not what Janine and I do on this show. We're just going to look at it technically. Thanks, Sebastian.
Yeah, look, I mean, it's interesting, isn't it, getting stuck between the fundamentals and then sort of trying to equate, well, why isn't the share price rising if it's so good? And I guess that's the point, isn't it?
It is the point,
that it's obviously not that great. Because if we look at the chart here, we can see that since it went onto the market, it's actually fallen. So that whole concept in the first 12 months, often these sorts of stocks, and especially when it's a bearish market, more of a greater percentage will actually trade lower. So, and that's what this has done. But the thing that I do like about it is the fact that I always like it when a stock shows you its hand, so to speak.
Correct. Yeah.
So once a stock starts showing you particular prices that are important to it, so this should help a little bit. You've got these highs here, so it's telling you that nobody wants to pay more than that at the moment for the share. But if somebody decides to pay more than that for the share, it could actually change the trajectory of the share, which means, you know, the probability of it falling away, in theory, is lower at that point.
If a company is continually expanding, often you won't actually see a lot of movement in price because they're putting a lot of their capital and etc. And so whilst it's got a good debt to equity ratio, it is expanding. It's using that its good position to keep expanding, and so you quite often may not see a big growth in the share price because the big end of town want to see growth.
They want to see the forecast.
They want to see the forecast. They want to know it's going to work. And when you're expanding or you're taking on new things, that can add a lot of cost to your bottom line and obviously restrict your profits. And the big end of town want profits. That's what they want.
I'd just like to see it settle down somewhere around this sort of level down this $2.10 mark and then take off. And that would be a sign to me that's potentially going to go in the right direction.
Okay.
But there's, you know, look at the volume as well. So you get this high volume and then you get all this patchy volume underneath, which it's not great. So he didn't say where this was in the indices, which index it's in.
No, and I mean, it sounds as if you're saying this is a bit 50-50 at the moment.
Well, it's not below $1, right? So that's important as well. If it was trading below $1, I'd be really concerned about it. But it's a $2, $2.20.
$2.20. Okay, so you're not super excited, but you're not super bearish either.
No, that's right.
Okay. All right, we now have a question from Anthony who says, "Hi Janine and Dale, I have recently been making my way through Dale's books and I thought I'd see how I'd go putting some of Dale's rules into place and if I'm using them correctly. Open to all feedback." Oh, that's brave, isn't it?
Isn't it?
I currently like the look of Beach Petroleum, both their chart and their positioning in the energy sector. I do not currently own the stocks, but my rules for buying the stocks would be short to medium term trade, buy around $1.73 to $1.76, have a stop loss at $1.45, price target $2.10. Keen to hear what you think, and thanks again for your help. Perfect email, isn't it?
Yeah, we looked at this one, I can't remember when it was, but I think it was some weeks ago, and I think, you know, this is a stock that I actually do like from a long-term perspective. So if we look at it on the monthly chart, we can see that it's spent a lot of time just trading down at these low levels. Yeah. But it's got some really important levels across here that I think are worth mentioning. So if this stock starts to take off, I think that it really is one to watch. So I actually like the stock. If it falls below this low here last week, I'd say just forget about it.
Forget about it, yeah.
For now, just keep it on the watch list. But I like what he's talking about, but I'm not quite sure about his buy price. He's
Buy
talking
around $1.73.
Now, it's his call where he's wanting to buy, but at the moment, we still don't know if it's going up. I mean, look at it on that monthly chart there.
Well, I'm not sure. So this blue line is $1.73. Yeah.
So that's 173.
So if he's buying a 173, I'm not sure how he's following the rules in the book, but that's okay. And I'm not sure how he got a price target of 210. So, but again, I'm happy to be for him to tell me how he got all that. But
well, he might be drawing a trend line down there somewhere across those highs there, and so anywhere above that sort of. You know, it could be $1.70 something, could be a buy once it eventually moves into that territory. But I haven't put a trend line on it, so I don't know whether it's already triggered.
I'm not sure exactly he's following the rules, but I mean, his stop loss is okay, so I don't have a problem with that. So he's done really well. I think his emails, to me, that's the email of the night for somebody who's well thought out of what they're doing. He's really thought it out. So well done, mate. I really do appreciate that. Next, we have an email from Craig who says, is it Craig? I think, yeah. He says, hi, Dale, thanks for your education. This is from the Trading Mentor one I mentioned.
Oh, right, yes.
That's why I was a bit confused. So we got somebody
Talking Wealth, wasn't it?
Talking Wealth, that's the one. A Talking Wealth person that sent it to me, and he said, thanks for your education on the 7 Steps to Success video. This is very inspiring to myself, and have felt the same feeling of going broke and restarting. He goes on, I ran into my old business partner today after watching the 7 Steps video this morning, and explained about doing the diploma in share trading. His comments was about paying tax, and that's why we went broke. He goes on, I was very passionate about what we did in business and have always learned to pick myself up again, and your inspiration and ideas has helped immensely. The other inspiration is the why, what, etc. And there is a YouTube video by Simon Sinek called Why. You may have already watched this, and it is inspiring for leaders. Keep up the great work and inspiration. Thank you, Craig. So Craig's talking about the 7 Steps to Success video, 7 Steps to Trade, Success in Trading. But I went back to him and I emailed him back, and I said, because you can apply those 7 steps to anything in your life, whether it's school or whether it's business or anything else. You just take the same 7 steps as a framework and then plug in the data basically and work on all that. But that's the sort of emails that we're getting from from those people on Talking Wealth TV. It's brilliant, and that is an hour-long video. There's a few of them that we've done, so there's some great education on there. So if you haven't checked it out, talkingwealth.com.au. But thanks for emailing in, Craig, and we really do appreciate it. If you are a Talking Wealth subscriber, if you've got some more emails, shoot them all through. We'd love to hear some feedback.
Yes, we would. And you've been asking us questions, and each week we ask you for your thoughts. Last week we asked, do you hold any precious metal stocks, and how long have you held them for? Why are you holding them is another question. Comment below now. And we liked the response from, who was it?
Red Brick.
That's right.
Yeah, Red Brick, who said, Janine's jokes are great.
Notice how I picked that one?
What's he smoking? Okay, and I always get a good laugh, and to be fair, Dale's jokes are great as well. That's better.
Oh, that's all right then,
like
isn't
that.
it?
That's all right. And the back and forth banter between the two of you is really entertaining and makes my Tuesday night. Thanks, Red Brick. He said, I did trade precious metal stocks in the past when I didn't have any trading rules, and as you probably guessed, the losses were big. Ironically, I now have proper trading rules and I don't tend to go near them. I do look at their charts from time to time if the market is flat, boring or bearish, but I don't trade them, as I usually find other stocks to trade that are more predictable. I guess I really find precious metal stocks similar to trading crypto, and I don't really find that sort of volatility worthwhile anymore. Remember, the most important thing when trading is to select stocks that suit your goals and are comfortable trading, as they are more likely to produce consistent results this way. So well done. That's really good from Red Brick, isn't it?
That's fantastic.
Very, very nice email.
And Wildman said EVN, NCM and NST held 3 months capital gain. So well done to you with your trades in the gold stocks. As you did with the gold stocks, you may find other sectors that go up together as well. And so you can find multiple stocks in one sector. Of course, the risk management rules should be well understood to manage exposure, given that you've got, multiple stocks in the one area. Thank you, Red Brick and Wildman.
Okay, well, thank you so much to everyone who did comment last week. Now, I heard Janine getting excited when she read your comments after the show, except I kept hearing chuckles, actually. We do love reading your comments, so please keep them coming.
Yes, thank you so much for sharing. And this week's question is, what percentage of your total available capital that you intend to invest in the stock market is currently invested in stocks, and when do you believe you will start buying more?
Good question. Now, I'm sure everyone watching will get typing their answers, Janine, as soon as the show finishes.
I do hope so. And remember, if you're listening to us on a podcast, we do not want you to miss out. So you can still send us an email with your answer. So do that now.
Okay, so before you do, give us a 5-star rating and review on whatever podcasting app you're using. If you can share a link to our show to your friends, we would absolutely be grateful. Now, I want to remind everyone to head over to talkingwealth.com and check out Talking Wealth TV. And whilst you're there, you can enter for your chance to win $50,000. So go to the website, talkingwealth.com. 50 grand's worth going over there, isn't it?
Wow. Also, if you've enjoyed tonight's show, please help us out by giving the team a big thumbs up. And that means click the like button underneath our video to let us know that you've enjoyed the show.
Now, if you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call, as we'd love to chat with you. Now, if you're not able to watch live, you can email your question ahead of the show. You do this by sending your emails to info@wealthwithin.com.au. It has to be an email. And remember to include Wealth Within Live in the subject line.
We really appreciate your support to the show and for subscribing to our channel by hitting that subscribe button now. We look forward to seeing you there. Well, that is it for tonight's show. We do hope you've enjoyed what we presented tonight. We have so enjoyed receiving all your emails and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us and we hope you have a great week. But for now, goodbye, good luck and good trading.
Bye for now.